What is the closing cost on a mortgage? Hi, my name is Ari Rahimi, a full-time loan officer, and in this video I want to go over what is a closing cost on a mortgage. Closing costs are the combination of service fees and the taxes collected at the final stage of real estate transaction. Mortgage closing costs run from 2% to 6% of the loan amount and including the property tax, title insurance, and many more. After applying for a mortgage, a lender should send you a loan estimate that is including the closing costs and some other information in 3 business days. Most of the closing costs would fall on the buyer, but the seller has to pay some portion too, such as real estate agent's commission and real estate tax transfer. After a buyer makes an accepted offer by a seller, the buyer needs to deposit an earnest money, which could be around 3% of the home value, to an escrow account, which tell the seller that you are a serious buyer, and in turn the seller would take off the house from the market. The earnest money is usually refundable, and you can put yourself in the best position by following the terms and conditions on your offer letter. Buyers also have some non-refundable fees at this stage: inspection and appraisal. Inspection identify any problem with the home, like electrical, plumbing, roof, or any other issues. And the appraisal, it's the home estimated current market value. If the home appraises as expected and all the contingencies are met, such as repairs of those issues that surfaced during the inspection, the deal would move forward to the closing of escrow stage. On the buyer side, there are some fees that only paid once. Those fees are included for example, your down payment, the money that you would put in as your own money, and the rest would be the loan amount of purchasing the house, and it could be anywhere from 3% up to 20% or even higher, depending on your situation. Escrow. The fees that you would pay for the escrow to collect and pay your tax and insurance on the property. Title insurance, a search of a title history to make sure the title is free of any lien. Notary, a cost for verifying the signatures. Recording, fee of the changes of ownership with the country government. Lender fees includes mortgage origination, the fees that will cover the cost of originating the loan. Underwriting fee, it's the fee that covers the evaluation of the client. Processing fee, that it's the fee that would cover the cost of the paperwork and the management. Flood certificate, that would cover the assessment of the property. And discount points are the upfront fees that it's an optional for the buyers for reducing their fees. And the mortgage insurance is the fee that's required by the lender if you have less than 20% as your down payment. Prorated fees are the fees that you can choose if you want to have in pounds or reserve account, and these are including 3 months of the insurance and normally 6 months of the property tax, in case that you don't face as a home buyer to a one-time a big chunk of money to pay for your tax property. You may hear in pounds or reserve that the professionals use to explain those fees that would collected from your lender, and they would pay it on your behalf for normally 3 months of the insurance and 6 months of the property tax. Broker's commission, property tax, transfer, and also some of the escrow and attorney fees are the fees that normally the seller in California would pay. I'm hoping that you find this video helpful and answering your question, but if you have any more question or concern, please let me know in the comment, and don't forget to like and subscribe my channel for the new videos that I'm talking all about purchasing a home and getting prepared. Thank you.